shares of both Enbridge and TC Energy were on the move today after both companies exceeded fourth quarter earnings expectations. Let's go to Aaron MacNeil, research analyst at TD Cowen, for more on this. Thanks for joining us today. Enbridge, of course, benefited from lower taxes in the U.S., but what else?
Yeah, I think, from an EBITDA perspective, it was relatively in line. Like most segments were right along where we expected. I think, if we're bringing it back to the share price reaction today, I think it's more a function of the growth outlook. Like just broader sector themes are very positive for Canadian midstream. Enbridge is no different. They did announce 2 renewables projects with the quarter, 1 wind, 1 solar. And that's kind of interesting in terms of the U.S. Tax credit landscape, which, the tax credits are expiring. So you need to have projects at least starting mid this year or ending by the end of next year in order to qualify for those tax credits. So we're seeing some growth there. I think the other big thing from the quarter was that they increased their sort of capacity of spending per year. So how much growth capital can they spend per year? And it used to be $9 to $10 billion, and now it's $10 to $11 billion.
Interesting. Okay, so you think they rushed renewables a little bit to get the benefit of the tax credit. They're an energy delivery company. They do pipelines, but how exposed are they to the price of oil, which we know has been suffering?
Yeah, so no direct price exposure. They'd be 98% take-or-pay contracts or cost of service contracts, so very highly contracted business. Where they have sort of exposure would be on volumes of their mainline pipeline. So let's say if production was down in Canada, mainline volumes could theoretically be down. But we've actually had apportionment is an industry jargon term, but ultimately means how much more supply there is than capacity. And so Enbridge mainline was over 20% apportioned in February, meaning there was 20% more oil that wanted to flow through the system than they could take on. So again, I would go back to fundamentals, incredibly strong for Enbridge on that front.
Okay, the company also has a backlog of $39 billion, up from, I think, $14 billion the previous year. Can you tell me a little bit about what that is for them? Is it just generally infrastructure build out, and how much would be from the U.S.?
Yeah, I mean, they would be firing on all fronts. I don't have it handy off my fingertips, but it would be a lot of U.S. for sure. U.S. gas, certainly a big piece of it, not only on the gas transmission side, which is probably the biggest wedge. They also would have a lot on their gas utility business, but even in the liquids business, I mean, they're doing a lot of work on the main line. They recently announced mainline optimization phase 1, which will expand the pipeline by 150,000 barrels per day. So there's opportunities across the spectrum.
Remind me also how they're part of the AI build out. I know they do have contracts, and what kind of revenue comes in from that, or do they expect from that?
Yeah, so I think the way to think about the AI build out in the context of Enbridge, I would maybe take a step back and think about power demand. And so they sort of access the power demand market through a couple different avenues. One would be their gas transmission business. Obviously, natural gas, has both the check marks of sort of reliability and affordability. They would also have the gas utility business, which would address that market separately, and then they have the renewables business. And again, I think it was the wind project today that the counterparty was Meta. So again, they're accessing that market through multiple different segments.
Okay, I do want to ask you quickly about a new pipeline. There are discussions about a new pipeline in Canada. I know they've mentioned it before. What are you hearing lately from this company about whether or not it wants to be involved in that?
Yeah, they've been pretty consistent in that they are not involved in that that pipeline today. It didn't sound on the conference call like they were more willing to participate than previous commentary. I think what they said, and I'm paraphrasing on the conference call today, was that they feel as though oil wants to flow south, not west. They feel as though the main line and expanding the main line is the most cost-effective and path to sort of providing egress for customers. You didn't bring up Venezuela, but obviously there's some concerns around, competing in the Gulf Coast refining market. Enbridge addressed that on the conference call as well, suggesting that, the heavy oil refining capacity may grow in the near term. They also talked about opportunities to export crude oil off the Gulf Coast, Canadian crude oil off the Gulf Coast. So again, I think they're sticking to their sort of plan, which is to expand the mainline.
Okay. 30 seconds or less. I'm sorry I've cut the time short, but TC Energy, not a lot of new projects happening. Give me a little bit about your thought on that.
Yeah, not a lot of new projects today, but they were pretty clear that there's going to be a lot coming in the near future, and they said weeks potentially. So I think you're going to see the cadence of project announcements increase pretty materially over the next several quarters.
Got it. Aaron MacNeil, got to leave it there. So thank you so much for your time. Really appreciate it.